Hi, Fabrice. Thank you so much for coming to the Investor Talk series. How's it going?
Hi, Max. All good. Thanks for having me here. I really appreciate it. Thank you.
Thank you for coming. As we start, Investor Talk is a podcast we run to help founders to better understand what venture capital actually is. So when they approach investors, they know how investors think about investing in startups. And they don't just go blind. As we start, would you like to give an introduction to yourself?
So I'm Fabrice Testa, and my mission on planet Earth is to inspire and guide game changers and innovators to create a better world. And so I'm a businessman passionate about turning crazy ideas into world-changing ventures. And so for the past 30 years, I work on the first disabled-friendly touchscreens. I work also on the digitalization of toxic cinema prints. I also now involved in a company transforming the solar PV market. And I've been also very involved in many revolutionizing industries for space to earth technologies. And basically, what I'm funding and investing into breakthrough companies. So, as an entrepreneur or as an investor, and I've been also I wrote a book, a bestseller book, Super Entrepreneurship Decoded. I like also to speak at international events. And I'm also a mentor and advisor of in some companies of my portfolio.
Thank you so much. As we start, in terms of sector, geography, and the stage, where do you prefer to invest?
Look, I invest mostly in space tech and deep tech. In my portfolio, I have investments that range from C to Series C and D. Some years ago, I did some investment in companies pre-revenues, but those days I prefer companies that are post-revenues. Now, in terms of geography, to be honest, I'm quite agnostic. Uh, but the reality is that so far I have mostly invested in EU and US. Yes.
And in terms of ticket, I mean, if you want to disclose, you don't need to. But in terms of size on average, for example, how much do you like to invest?
I'm part just to give you an answer to this. I'm a business angel, okay, and I'm part of EBAN, the European Business Angel Network. I was the EBAN Space chairman, and every year EBAN is doing a survey, and typical investment from business angel, at least in Europe, range from 10k to 100k. The average ticket is more 25k. So clearly, I'm in that range, and
Mhm.
I know that there are some super business angels that invest several hundreds of thousands for one single deal. Sorry. Personally, I prefer to spread my risk across multiple companies, and rather than big tickets in, let's say, fewer companies. Now, of course, it's always related also to your, let's say, financial capacity. But yes, I prefer to spread, let's say, my risk. Today, I have about yes, directly or indirectly, because also through funds, etc. But I have about 30 plus, let's say, participations today.
That's a lot. You got a lot of experience when it comes to investing in startups. In anyway, you're right. I mean, in startup, the failure rate is pretty high. So you must
Exactly.
adjust the risk in some way.
Yeah, yeah. It's a very risky business for sure. Yes.
It is probably the most, I mean, in my opinion, is by far the most exposed to risk. There is no collateral, there's nothing, just equity. So
No,
it's very
but
little.
there are some reward for sure in terms of course, financial reward, but also I think it's also quite pleasant, to when you have the possibility also to be an active investors, to be close to the teams and to help them, etc. So I think yes, it's an investment, but it can be also we're adding in several other aspects for sure. Yes.
Yeah, indeed. I mean, in terms of approaching investments, what do you like to see the most? As you invest all in early stage, we know that investing in early stage and growth stage is a different story. Metrics change. But they say invest in early stage, for example. Where do you pose the most your attention? On the team, the technology, the idea, or the execution, if any?
I have, let's say, many times, let's say, this question, and my answer is always the same. I refer to what I call the 4Ts approach, and it's not because my name is Testa, but it's a mnemonic, let's say, way for me to remember what are the fundamentals for a company. So, what is the 4T approach? Is the first T is technology. So what is the idea, the technology? Is it breakthrough enough? Okay. So this is the first thing I will look for. Is it really solving a big problem? Is it really a breakthrough technology, something which is really disruptive, radical solution, maybe based on a crazy idea? So that's the first T. The second T is traction. It's to remember, okay, the market. Is there today a market which is big enough to, let's say, make a business, to generate revenues with this idea, with this technology? Okay. So that's also the thing that I'm looking for. Then the third T is the team. So is there a team able to execute, let's say, the plan, able to really deliver, let's say, value? And when this team is not only the funding team, but the organization, the plan. So do they have a plan with they will be able really to materialize, let's say, this idea? And the last T, and I think is one which is very important, is the timing. Um, is it the right time for this solution? Um, are there, let's say, some circumstances or a good environment for this solution to thrive really today? So I think this is important. So technology, traction, team, timing, for me, these are the basics where I try to check out when I have an idea which is submitted or a pitch. And I need to have a strong conviction on these four elements before, let's say, potentially investing. Yes.
When it comes to investing, there are some investors who really can go 100% online from the beginning to the end, up to investing. They never met the funders. What's your case? Do you want to see them face to face?
I think that face to face is super important uh, if I'm going to be a co-founder. I think I will not, let's say, co-found a company and uh, to have some kind of active role if I have not met, let's say, face to face the founders. Or eventually if I will lead an investment. Now, if I join a syndicate, honestly, I don't feel it's absolutely necessary. I will trust the lead investor. Well, if you don't trust the lead investor anyway, don't, let's say, participate to the syndicate. But if you have, let's say, trust in the lead investor, I think yes, I will let's say leave with them to meet face to face the founders. Um, Now I know also that many business angels, they prefer to invest in startups where they are close geographically, that they can meet on a regular basis. I think that's has some value for sure. But I have more opportunistic approach. So what I want to have is the best deals on the table, and they can be anywhere. So for me, even if I don't meet, let's say, the founders, but again, I know that some people, for example, like the lead investor they have met, for me, it's enough to have the conviction that it's a good investment anyway.
Outside the syndicate, we are right. I mean, if you're someone already leading and talking to the funders, probably not daily but weekly. Outside, when you invest directly, in startups after investing? Do you like having some kind of, for example, monthly report or meeting with them if you can, any 1, 2, 3 months?
Yeah, I think to have regular updates is something which is very valuable. And for example, in my portfolio, I have some companies that every month I know I receive a monthly update, and I like it because at least you can follow up what is happening. Unfortunately, I have some companies I have no updates at all. Sometimes I just receive, the invitation for the shareholder meeting, but in the meantime, no updates at all, never a call, never an email, etc. And to be honest, usually these are the companies that are not doing well, because usually the companies that are doing well are well managed, and part of the management is to have regular updates. Um,
Yeah.
so yes, I think this is important, and I have, for example, a template that I've been using many times for my own companies. And on one page, you have everything. You know what is the position of cash, what is the activities in terms of business developments, of marketing, in HR, etc., and what are the green flags, the red flags. And so with one page, you have everything. And to be honest, this is enough. If you send this to the shareholders, they will be happy, or shareholders and investors. They will be happy with this because very quickly they can see, okay, what is going well, what is going less well. Maybe I can help in some aspects also, etc. So I think it's important for the founders to give these kind of updates to the investors and shareholders. Yes.
You also co-found startups, so you're pretty hands-on. Which kind of help do you give to these founders?
If I really co-found, let's say, the companies, I try to act a bit as a kind of, sometimes as a board member, a board director, board observer, or board advisor. So really to be close to the funding team and the founders, to help them as best as I can. So usually I like to help on the strategy, on the fundraising, making connections. For example, in the space industry, I know a lot of people, so I can help to bring, let's say, to make some intros, etc. at some levels. In terms of business development too, um, or sometimes, some founders, they will ask me some specific advices. Recently, one company, they they wanted to hire a business developer, and they said, yeah, can you, because you have a lot of experience in business development, can you have a last interview with the guy just to have your opinion if the guy is worth to be hired or not? So that's the kind of thing where I can help. So yes, and I like to make it, as I was saying previously. I think it's part of the game. It's also to be active. I have, let's say, a lot of passive investment for sure. But what is really nice is the active investments where you see that you can have some influence, let's say, on the course of the business. That's at least for me more rewarding than just passive investments.
It will be very helpful for the founders themselves. I mean, having someone with experience who has done already multiple startups make the difference, especially for the first-time founder.
Yeah,
A
sure.
huge difference. Do you lead or do you like lead some investment?
It can be. If I have a strong conviction, let's say in the startup, I may eventually lead. But I have to be honest that most of the time I'm more joining, let's say, a syndicate, just for a matter also of bandwidth and time that can be allocated to it. Because when you lead, you have to make then all the due diligence, etc. So it's a lot of work, and to be honest, I have quite a lot of different activities, so I don't have always the bandwidth. but it's something that I don't exclude if really there is a very nice deal. And I think that yes, it will only happen if let's say I take my responsibilities and I lead the round. Yes.
I mean, many founders, especially when they come to the very early stage, they need help when they need to raise the next round. In this case, you give them some intro to your network of angels. You are part of a big angel network, but outside this, for example, do you try to help them to
Yeah,
get the
sure.
next
Because
funding?
I know also a lot of VCs, etc., in the space tech and deep tech sectors. So yes, for sure. Uh, if I can, I will make intros, etc. And to be honest, it already happened in the past with for some companies that I did the initial intros, and yes, it resulted to let's say an investment by the fund. So it's always, of course, better for startups when they have a warm intro instead of let's say a cold call. It's of course works much better. Um, Otherwise, what I can also help them in the fundraising is to give them some guidance how they should structure the fundraising, because the reality is that many, at least maybe founders that it's their first, let's say, company, etc., they always think only 100% equity. The reality is that in terms of corporate finance, you need a bit to be more creative. And there is equity, there are the convertibles, there are the SAFE, there is also debt, which is usually not, let's say, considered by founders, but I think debt can be very interesting because it's non-dilutive. For example, there is the EIB, for example, with venture debt. Now you need to be at Series B level, but this is a nice scheme. There are also the R&D contracts. There is the non-recurring engineering fees eventually. So there are many ways besides, let's say, equity to finance a company. Of course, the first way to finance a company is to get revenues from customers. But I think sometimes it's nice to give them a bit, a broader view of what is available, to fund the company besides purely equity. Because sometimes, if they can be very quickly largely diluted, which of course is again part of the game. But there are some, I think, if you are a bit creative, you can find some ways to reduce, let's say, the level of dilution. Why to have some significant, let's say, funding? So it's also something where I like to discuss with founders about. Yes.
I mean, in Europe, safe, for what is my experience, still not that understood. Many they prefer convertible. It's already something more tangible for them in terms of security. But for example, I mean, in my experience, for what I really like, I prefer safe all the way along in a very early stage startups. Also because it's very difficult to evaluate a startup in such a early stage. It's like as pre-seed or seed round where no revenue, nothing. Valuation comes very, very subjective at that point. Safe helps you. And that's at least what I think.
No, you are perfectly right. I think safe is a nice notion. By the way, it was created by Adeo Resi from Founder Institute. He imagined, let's say, the safe. I think it's a very nice tool.
Yeah.
Now, it's true that in many jurisdictions in Europe, that's not feasible. From
No.
a legal perspective, you cannot make it. But yes, convertible loans, it's something which works pretty well. And I think there is many ways to modulate in a way which is quite attractive. So I think indeed it's something that has to be used, but it depends, about the appetite of investors for it. Usually investors, they tend to prefer equity anyway. But yeah, it has to be evaluated case by case, I would say.
It does. I mean, do you expect the startups in your portfolio to interact between them? Sometimes some investors they make introduction between founders. Maybe you can sell or use the technology of the other one.
Yes, I think that I have some examples. One very recent is two space tech companies, and they submitted together a kind of recommendations, related to EU, an EU entity, etc. Um, and it's something, to related to climate crisis, etc. So I think this kind of initiative, I think, is nice, and it's nice when some startups they join their forces because they are working. They are not competitors; they are more, let's say, complementary, but they work on a similar, let's say, in a similar field. So I think it's nice if they can cooperate together. So that's one aspect that I will highly recommend. Now there can be business synergies, and of course it's very nice because if thanks to, let's say, these business, let's say, opportunities, both companies can be more valuable, so raise their valuation. The valuation of my entire portfolio will raise. So I think it's something which is nice. So generally speaking, yes, I will encourage companies to work together. It's what most investors, business angel or VCs are doing. It's to try to find some synergies between the portfolio companies. This is also a reason why usually they don't like to have two companies that are doing the same thing in the portfolio, because they prefer to have companies that are different and eventually that they can work together. Yes.
Well, we know startups, many of them they fail. During this journey. They can actually avoid failing with pivoting, but for them it's very difficult. For many founders, pivoting is pretty much like failing. So, in your startup portfolio, if you encounter such kind of signal, right, you see pretty well when it's time to pivot, otherwise it's too late. Do you help them to understand that actually it's better to make an effort when you still have some cash and move on to something different?
I'm going to tell you a true. Uh, you know, we all have read and we all listen. People, coaches, etc. Failure is part of the game. If you fail, you can fail, but what is important is to take a lesson from it, etc. That's true. That's true. But the reality, we don't like to fail. Who likes to fail? So
Nobody.
let's be honest. Nobody wants to fail. Even if, yes, when you fail, you fail. So you have not to be paralyzed, not to become an entrepreneur, or not to, let's say, act. I always say we need more doers. So we need people to, let's say, create ventures, invest in ventures, etc., and take some risk. So, and you have not to be paralyzed by the fear of failing. But nobody likes to fail. So I think what is important is to, uh, as an investor, to have regular updates to detect these red flags I was mentioning. So if you have monthly reports where there are the red flags, green flags, and to see when you can act, and maybe if you see that there are red flags, maybe you can contact the founders, say, look, what do you think? Do you have a solution? Maybe you have to try to find some solution with them, etc. And sometimes indeed pivot is necessary. But I wrote a book, Super Entrepreneurship Decoded, and I described what I call the age of exponential acceleration. So today, everything is going very fast. So change and adaptability are essential for the survival and the success of any venture. So I think in my opinion, what an entrepreneur has to have today is to have a clear, let's say, uh, let's say, a compass where he wants to go, but he needs to be enough agile to eventually change if, let's say, things are changing. And we know that today, because of this age of exponential acceleration, many things are changing very quickly. Look, when COVID, let's say, happened, many companies, they try to adapt to the change of COVID, and for some that could adapt very quickly, they could survive, and some they could not adapt quickly and they fail. So I think adaptability is very important. Or when we have seen last year that there was, let's say, a falling of investments, and some companies, they could not close their funding rounds, they had also to adapt, and maybe to reduce a bit, their let's say, uh, they are, let's say, they had to maybe reduce a bit the workforce. They had to delay some expenses, etc. So I think adaptation is very important, but sometimes you need indeed to pivot and maybe to do something else, because maybe the market changed, maybe there is something that happened that was not foreseen, etc. So anyway, let's be honest. Let's say entrepreneurship is art, and it's not easy. But yes, you need to be flexible enough. Yeah.
This is personal. Why you decided to take the road to venture capital? It's sometimes it's very. I mean, I manage myself as well. It's very dangerous. I mean, it's not bad thing. I won't say it's bad thing. It's not. But for sure, it's by far the highest level of investment you can make. Indeed.
No, I think it's a good question for sure. Look, I've been a serial entrepreneur for the last 30 years. Um, and after the sale of one company, uh, I had the luxury of having a bit of time and money, but I had no new entrepreneurial idea or project. And it's true that in the past I was always reinvesting in my companies, um, and I told to myself, okay, how I can be efficient, how I can, let's say, be worse. And for me, the answer was to probably try to support uh, companies funded by others. And so I started to make some investment, but also some mentoring, coaching, in order to help others with my past experience. Okay. Now, what happened is that after, besides investing, I also co-founded some other companies, because, I think when you are an entrepreneur, it's difficult to stop to be an entrepreneur. But it's true that, I see myself in the future more spending time on investing than on building companies. Uh, and I think as an investor, you can help, of course, with money, but not only. I think you can also provide advices. You can so you can have, if you are part, let's say, of the cap table, if you are a shareholder, you have something to say, and you can probably try to help. Yes. Without, let's say, of course, spending all your time in the operational, let's say, day-to-day things. I think you can still help and build a company, and I think is what I like. Yes.
To me, the best investor for any early stage startup and not only is an entrepreneur when it comes to angel. Because
Probably.
I mean, they don't need only money; they need help. There is not. I mean, this is of course as person, but as I can see, you agree. But they need some kind of wise help, mentoring, which is not advisory. Mentoring is something completely different. Let me, if you had three startups, very very similar, but you must decide to invest. You can only invest in one. What actually makes the difference for you?
Uh, in my book, I presented a method which I call the crazy method, because it's materializing crazy ideas, and crazy is also an acronym. And I would refer to this, which is a bit linked also to the 40s I was mentioning. So the the C is for catapult your ambition. So what I have observed is that the best entrepreneur that I call the super entrepreneurs, they catapult their ambition to very high levels, and they have a strong purpose. So for me, it's what I will try to see within the startup. What is their level of ambition? Do they want to become a $1 billion company, or they want to become just a lifestyle business? That's for me the first thing that I will look in the founders and in the startup. Then the R of the crazy is rock solid plan. What is their plan? What is how they are going to make money with it? Do they have the right team, etc.? So that's also very important, because what I have seen is that the companies usually that succeed at best, they have something which is really well detailed, quite granular. They know exactly the market, the competition. They know how they are going to sell. They master a bit of everything. And for me, that's really what makes the difference between amateur and professionals. And I want to invest into professionals. Then the A is amazing solution. So what I was saying with the first T, the what is the technology? Is it a real breakthrough that really solve a big problem that can really help humanity? That's for me what something which is very important. Then the Z is for the zeitgeist, so it's the timing that I was mentioning. The is it the right time for this investment? And last but not least, the Y is for Yamakasi. So Yamakasi is a movie from Luc Besson, and it's this people that do the parkour. This very um, spectacular, let's say, jumps, etc., in the cities, etc. And this is for me the mindset that the entrepreneurs must have. They must be hard worker, but agile enough, and it's what we were discussing just before. And so for me, I think if they embrace, let's say, this crazy, let's say, mindset or crazy method, I think for me, yes, then I will have a strong conviction that it's a company worth to invest. And so this is a bit this or the 40s. It's more or less, the same. It's another way to for me to try to have in a very easy, let's say, acronym, all the basics that are necessary. Yeah, for the startup.
What would you like to see in a pitch? If a founder comes to you pitching, many pitch are very articulated, very long, say nothing. But if someone comes to you, what actually you want to see in the first 2-3 minutes? Because attention after 2-3 minutes goes down. There is nothing to do. And so, what actually can convince you? Okay, let me have a follow up call with this guy. Makes sense.
Yeah, for me, the pitch is very easy. First, what is the do they have a strong tagline? So, what is their vision, their purpose, their ambition? What I just was mentioning. Then, what is the problem they want to solve? Is it a big problem? Is there a big market for this problem? Is it a real problem with a big market, etc.? Then the solution, is it a, let's say, a breakthrough solution? Is it something really disruptive, or is it just incremental? And then how are they going to make money with this? And what is the team? I think for me, these are the fundamentals. I think this is the minimum that should be in a pitch. What's the vision, the problem, the solution? How are they going to make money with this? And do they have the right team? And why now? Is it the right time today for it? If they can answer to this, I think for me, they succeed in the pitch, in my opinion.
How founders should approach investors like yourself or venture capitalists? I mean, many times there is this spray and pray and see what's going to happen. But maybe a more calculated, more yeah, pay more attention to the people you're talking to and how you're talking to, approaching them, maybe can pay off better?
I think, of course, ideally, it's better to approach with warm intros, as I was mentioning before. Now, cold, let's say, emails, cold calls can work. LinkedIn is also a good tool for it. I think a good way also to approach investors is at pitching events and events that are related to startups, uh, like Slush, Web Summit, etc. Well, it's overcrowded for sure. But anyway, I think still investors are scouting, let's say, startups during this event. So there is a way to find some investors. But for me, the very dedicated pitching events probably are good. There are also a series of events that organize, matchmaking between investor and startups. I have found that these kind of events work very well. And now what the founder should have before, let's say, meeting investors, and it's the same if they are venture capitalists or business angels, they must be prepared enough. They must be investor ready. So they must have a rock solid plan. They must have a solid team. They must have strong financial projections. They must have everything in place. Because if you are not prepared enough, if you have some things that are lacking, etc., it will not work. If the investors are very good and do, let's say, even not the due diligence, but a pre-due diligence, if they see that it's not robust enough, they will just, let's say, turn off and let's say go to another deal because as investors we receive a lot of deals. So yeah, there is no real, let's say, fear of missing out, because there is always another deal that will pop up. So I think what is very important is to be prepared and to have everything which is very, very solid. Yes.
I mean, you invest in deep tech space where IP probably matters. So would you like to invest in startups actually that they don't hold 100% of the IP?
It's of course a bit mandatory that the company owns the IP. Now they can own the IP by trade secret, for example, even if they have not, let's say, filled patents yet. Because we know that filling patents is not always so easy. It can take time, money, etc. So for me, that's not mandatory. But at least they should have an IP that they own. For example, there are some startups, they say, yes, we have this technology. And when you dive a bit deeper, you see that, for example, the IP is owned by the university. Because in deep tech, this is something which is quite frequent, that it's founders that were scientists, researchers in universities. Then they spin off from the university. But the reality is that the IP is owned by the university. Yes, we have an agreement, etc., but the agreements are usually not super clear, etc. So this can be this kind of situation can be red flags for sure. So it's always better if there is a freedom to operate and the company has ownership of 100% of the IP. That's much better for sure.
Let me close with what's going to happen next. Where do you see most of the money, the funding venture capital? 2023 has been pretty bad, but 2024 maybe can go a bit better. Still, a lot of billions are flowing. Where do you see this money going in terms of sector this year? I mean, taking away AI, put AI as, you know, for everything, right? We jump out and we move to sectors. Where do you see the money going?
No, for sure. I agree that AI now it's everything, but bon, there is some hype because of, AI is not new and machine learning is not new. What is new is generative AI for sure. And of course, this will continue and is really booming for sure. Look, I strongly believe that space tech will continue to thrive. We have seen since the last 20 years continuous investments into space tech, with what we call, the new space race, etc. And space will continue for sure. Mostly in space manufacturing is a growing area. So the capacity to manufacture and to build things directly into space. For example, I co-founded Atmos Space Cargo, and they are developing a capsule that will allow to manufacture drugs in microgravity and return them safely and eco-friendly to Earth. So these kind of things, I think, will explode in the coming years. In terms of deep tech, I strongly believe that the interaction of AI and bioengineering is going to explode in coming years. And for example, I just closed an investment in a company that leverage AI, biology, and genomics to cure a very important disease. And I think in the future, we will see more and more such kind of companies that use AI, but with biotech in order to really either produce new food or to cure, let's say, some important disease, etc. I think this will be very important in the future. So yeah, I think AI is nice, but AI applied, let's say, as a tool to let's say create, let's
Yeah.
say, not just AI for the pleasure of AI, but just AI as a tool to let's say come with very radical solutions. I strongly believe, and particularly in the biotech, let's say, sphere, I think this is something that is going to explode in the years that come. Yes.
Yeah, I agree. AI must be considered a tool and not the tech or the sector. Sometimes, I mean, I understand. We've been talking about Web3, and after we start with crypto, blockchain, Web3, every year you have something new come up, and for 3, 4 months, everyone talking about and forgetting. AI will stay forever. That's the reality. But we should consider AI, I completely agree, as a tool and not just AI. As
Yeah.
you say, generative AI, because it has been there forever. For like 20 years, we have been talking about AI. Already algorithm.
No, AI
There
is
is
not
nothing.
new for sure. Now, of course, this conversational AI like ChatGPT is pretty awesome, and we all use it now.
Yeah.
It almost replaces the browser, because now when I have a question, I try to use ChatGPT rather than Google, for example, because you don't have 10, let's say, or 1,000, let's say, references. You have just one reply, and it's what you want. So now what will be interesting is to see what are the creative use cases with generative AI.
Yeah.
So how can we really
Yeah.
leverage this tool to create very disruptive ideas that again solve some big problems? Because I'm strongly convinced that the world is much better than maybe 100 years ago, 200 years ago, for sure. But there are still a lot of different problems that we are facing, that humanity is facing. And I do believe that entrepreneurship and tech entrepreneurship will allow to solve some of these big problems. And yes, this is why we need also, let's say, savvy investors into this kind of technologies in order to contribute at building a better future.
Entrepreneurship is the life of the future. There is nothing to do.
Yes, exactly.
Fabrice, thank you so much for coming to the Investor Talk series. It's been an absolutely pleasure for me. Thank you.
Likewise, great pleasure, Max. Thanks again for having me at this show. Congratulations for what you do to promote entrepreneurship and investing. And yes, and all the best.